Hello, in this presentation we will be setting up new accounts within QuickBooks Pro 2018. We will be continuing with the file we have been working on in past presentations. If you haven't seen the past presentations, that is okay. We can learn just to set up new accounts within here. We're going to be working with the Get Great Guitars program we've been working with. If you have been following along and or would like to start at this point and have access to the backup file as of this point, then you could restore that and be starting exactly where we are at as of now. In order to do that, in order to restore the backup as we've seen in the past, you want to go to the File tab and you want to open or restore and then find the backup and restore that. If you don't have that, that's okay. We're just going to see how we can enter new account information. First thing, we're opened up to the last place we were at, so I'm going to go ahead and close this window here. When you first open the program, you may be going straight to the Home tab or whatever was open in the previous time period. Note that I always recommend having the Open Windows tab open. That's helpful to me to see how many things we have open and to toggle back and forth between them. In order to do that, you go to the View tab up top and you go to the Open Windows tab. That will show you which windows are open. For me, that only being the Home tab. Now we're going to go ahead and enter some more accounts here. We started a new company. That company is selling guitars, so we have merchandise inventory. We entered some items. That was done within the item list. Those items related to inventory items. Now we're going to enter accounts. So we want to enter some more accounts. You may just want to enter a few accounts. If you do that, if you're just looking to enter a couple accounts, you could do that while you enter data. We will do that at a later time. But if you want to enter directly and see the chart of accounts and see where you're putting it, especially if you have account numbers and you want to know exactly where you need to place these things and what the names of the account and the categories of the accounts are, it's best to go to the chart of accounts, the list of accounts as QuickBooks calls it, and that is under the lists. There's a couple different ways you can get to this lists place. You can go there through the home page as well, but this drop down I think is the best way to get there because you can get there no matter where you are or what window is open within the program. So we're going to go to lists and then we're going to go to the chart of accounts. That will be our major list. This of course then is the chart of accounts that we are using. It looks kind of like a trial balance in that we're going to have the account names. We do have balances over here. However, note that it only has the balance sheet balances, the permanent balances, not the income statement because it doesn't know what date range for the income statement account. So it can't really put income statement balances down here. The main thing we need to see here though, however, is the account types. Now this is really important because the account types are in order by type of account, meaning it's going to have like the balance sheet first and then the income statement accounts, meaning the balance sheet has assets and then liabilities and then equity, and then the income statement accounts have income and expenses. Getting even more specific in that, then we generally start off with cash because that's our most liquid asset account, and then accounts receivable, that's our second most liquid asset account. Here we have other current assets, and then the long-term assets, fixed assets, and then other assets. And then these are going to be other long-term assets. And then we have the liabilities starting with the payables, accounts payable, and then the current liabilities, other current liabilities, anything other current other than accounts payable. And then it's going to be in order by equity, income, and then cost of goods sold, account types, and then expenses. So these are not account names. These are the account names. These are the account types. These are the things most confusing to most people that are setting up QuickBooks. And if we don't get these right, then there could be problems, meaning things will be out of order and we'll have issues. If you have account numbers, note that these would be on the left-hand side. If you're good with account numbers, I recommend using them. If you're new to QuickBooks and you don't know how to set the number and system up, then probably not want to use them. Note, however, that QuickBooks will still order the accounts in order of the account type first, assets, liabilities, equity, income, and expense, and then these orderings within there before the account number. So if you numbered, for example, accounts receivable 1,000 and then service revenue number 1, it wouldn't put service revenue on top. It would still put accounts receivable on top. It first ordering by the order of the accounts and then by account number. What the account numbers do, however, is order something like all these expenses in terms of numbering order rather than alphabetical order within the subgroup of expenses. So as we set things up, we want to keep that now in mind a bit. Now note that we picked a type of industry, which in our case was a merchandising inventory industry, and that meant that QuickBooks set up a lot of this information for us, and meaning it gave us a list of accounts, not too many, and they're somewhat in alignment with what we would think we would have for the accounts for that industry. So that's a good place to start. If you want to create your own accounts, that's nice because your own accounts can give you some more information exactly about what you're looking for. However, if you set up your own accounts, it's likely that it might not match up to kind of, what an accountant or like the tax code would assume would be the normal categories. That's not necessarily bad. It might be, there's pros and cons to that. But if you want to try to make your thinking more in alignment with the standard categories that are out there, then you might want to choose whatever industry you are in. QuickBooks will then set up a chart of accounts based on the generic account names of that type of industry, and then we can add or subtract what we think is most significant, typically adding expense accounts at that point for the expense accounts that we think are most significant to our particular business. If there's a particular name that we really identify with and we want to track something in accordance with that expense name, then we will add it. So in our case, we're going to go through this and add a few different accounts. And the first account we will add is going to be the checking account. Note that we don't have a checking account yet, so we're going to add that. In order to do that, we're going to go down to the bottom. It's a little bit unusual. We got a drop up kind of window down here, and we're going to go to a new account, and we're just going to enter one new account. We're going to enter them one at a time here and say new. Now within the checking account, we know the checking account is of course an asset, but note that it's breaking this down into more categories than just assets. We want to make that the bank account. So there's going to be specific items within the bank account, particularly the bank register that we will be using. So we're going to select that. That's going to be our item there. And we could call it the bank name. For a Bank of America or Chase or Wells Fargo, we would put that name and possibly the last 4 digits of a number so that we can identify it within our QuickBooks program. We are going to be very generic here and just call it the checking account. And so that's going to be our major checking account. That's basically all we need. We don't really need a description too much. We could have the account number. We don't have to have it. Depends on what our functionality will be. Within these accounts, we're just going to put basically the account name. That's where we're going to track this information. Tax line item, that will be applicable if basically you're combining QuickBooks to a program. Intuit does integrate with some tax programs, and it'll kind of be able to link up to those tax programs. But it's not required to have the tax line. We're not going to mess with the tax line at this point. What we do want, however, is to enter the beginning balance, because we're assuming that we're starting this business where there's money already in the bank, and we want to put it in there without having to do a journal entry or do anything funny, and therefore we have this enter beginning balance option. It's only really there when you first set up the account. So if you're opening a new business and you're setting up the checking account and you want to put these beginning balances in there and let QuickBooks just do whatever it does to the other side of the journal entry, then we're going to set up the beginning balance and we're going to set $25,000. That's what's in there. And note that when you do this, you want to check basically what's in there as of the last date before the period you are starting. So in our case, we will be working in 2021, January 1st, moving forward. That's what our work problem will be working with. Therefore, I want to enter this date prior to the current period that we're working in. So QuickBooks will just throw it in there and the beginning balance will roll forward as of January. I don't want it messing with the income statement. Therefore, I'm going to put it in the prior year of 12/31/2000. Again, this being a problem that's going to be worked in the future because that's kind of how it has to work when we do these things. Therefore, the time period we will be working on is 12/31/2001. We're putting this date in there as of 12/31/2000, the day prior to it. so that QuickBooks will just put it in the checking account and it'll roll forward to what we want as of January 1st of the current year 21, the year that we will be working with. So we're going to say okay, and that's the main thing we want there. Now I'm first going to hit save and close just to see what this does. We could hit save and new because we will be entering more data, but I'm going to say save and close just so we can tell. And note that it's going to give us a pop-ups, one-stop services, save time, your financial institutions, you could serve freely. So we're going to get, QuickBooks is basically giving us kind of an offer of what we can do now that we have basically a checking account here. These will happen from time to time. I'm going to go ahead and close this for now, and we can look at that later. But we've got the checking account here, and note the balance then over here. So we've added that balance. Where did the other side go? We'll take a look at the trial balance to see where that went. But for now, this is what we want. We want that beginning balance to be showing there. Next, we're going to enter another new account, and the next new account will be a credit card account. So we're going to do the same thing. I'm going to go to the drop up at the bottom, a little unusual, but that's where they put it, drop up. And then we're going to scroll up to new. We're going to have a new account. And the new account, this time we're going to have a credit card. Now, a credit card meaning we owe something, it's a liability account. However, they have a special one here. So instead of putting it into like current liabilities down here, current liabilities, we're going to put it into the special credit card. And what that does is it helps us to track that balance because we'll have this separate credit card register that we can track. And if we're not paying off the entire credit card every month, it makes it a lot easier for us to track what we're paying, how to expense those while still not paying off the entire balance. So there's going to be the credit card that we want, and we're going to say continue on that. We're going to set up the credit card as we're going to say it's just a Visa. Again, we're going to be very generic. I'm not going to put it in any subcategory. The subcategory is just so you can take a look at if you would like. Some people really like the idea of subcategories. We might have a generic category, for example, of credit card, and then put a list of the credit cards if we have more than one within that subcategory. And then QuickBooks will group it there, and it'll also, you can minimize the groups too. So you can play around with options like the subcategories as well. But we're going to put it into just the Visa. This is our one credit card. Again, I'm not going to put a description. We're going to keep it simple. You could put the account, the card number. It's not required for us to work through it here. So if you don't need that data in there, you don't have to have it in there. Again, the tax line is going to be something specific if we were to be working with, especially, or it would work best if we were working with some of Intuit's other software and integrating that software, that tax preparation software. Otherwise, we will print out the financial statements at the end of the year and create our taxes from them. What we do want to see here is going to be this opening balance. The assumption then that we're starting this business, we already have a credit card, a business credit card that we have a balance in. We want to put that balance into the system here in some way without having to do debits and credits, without needing a journal entry, without doing anything funny. So we're going to use the opening balance function, and we're going to go ahead and enter that balance date within the credit card amount. That opening balance being 1,000 that we're going to put there. And again, this problem, we're going to be starting with 12/21, the year that we will be working in. Therefore, 2021, January 1st, 2021, the period where we are going to be starting to put more information. Therefore, we're going to put this in as of the last day of the prior period, 12/31/20. That's what we want, so it's in there as of the last date. And then as of January, we're going to be starting the new time frame, and we're going to go ahead and say okay with that. And then all the information, other information is there. Again, I'm going to say save and close just so we can see what happened. And once again, it's going to say you want to set up this. I'm going to say no. I'm going to close that. And then we have the credit card that we have just set up. If we scroll up to the top, here's our banking and here's our credit card. There's the 1,000 that is owed on it. Next thing we're going to do is set up a long-term liability, a loan that we owe. We're going to do that by, once again, we're going to select the drop up and we're going to go to the new here. So we're going to have a new account, And this time we're going to have a liability. It's going to be a long-term liability. That means it's due over a year. So we took a loan out from the bank. We owe the bank money, and we have the principal amount of the loan that we owe that we need to put on the books. So we're going to go ahead and put a loan. Now there is a loan option here. I typically put the loan into the long-term liability, however. So I'm going to continue with that method. I'm going to go down here and we're going to go to long-term liability of the loan. That means it's going to be a loan that's going to be due over a year's time frame, and keep that there as opposed to short-term, which is going to be due within a year. And then we're going to go ahead and continue with that. And our major thing we want to do, once again, the account name, we can put the same loan payable. We could put long-term liability or long-term loan. I'm going to call it loan payable. Payable to me means it's going to be a liability, something we owe. Not going to put it into any subcategory. I'm not going to put the description or account number. We're going to keep all that. What we do want to do, however, is put the beginning balance, once again, assuming that we're starting the company, owing money at the beginning, wanting to set up that balance without having to do a journal entry, but letting QuickBooks do the work for us by putting in the $22,000 here. The date, last date of the prior period, is going to set things up as of the first date of the period we're working in. So we will be working in as of January 1st, 2021. Therefore, we're going to put this data in as of 12/31/20 to have it the last day of the prior period. So I'm going to say OK on that. And once again, save and close. And it puts it right there. So there is our loan for this item. And so we're going to enter one more item, and that's going to be fixed assets. It's going to be furniture and fixture. Notice we have a furniture and fixture here. So we have that amount. What we would like to do there is just add the balance then to that amount. Note that the reason we have that account, however, is because when we set up the chart of accounts, QuickBooks already put that information into here, assuming that the business we're in, being a merchandising business, would have the fixed asset account type of furniture and fixture. So if we were to have furniture and fixture we were to be setting up, it would be the same process. However, we would be putting it into not an asset, just general asset, not a general current asset, but into property, plant, and equipment, a specific asset category, one that depreciates over time. So since we have this in here, we're just going to go down. We're going to select that account, of course, first. And then we're going to go down to the account, and we're going to go ahead and edit that account, because what we're trying to do here is put the beginning balance into this amount without having to do anything silly or do anything difficult or hard, which would be to enter a journal entry. We're trying to just have QuickBooks put the beginning balance and do the journal entry for us. So therefore, we can just go to the enter opening balance. We're going to enter that balance as of the end of the prior year that we're going to, before the year that we will be working in. So the balance for us will be $75,000, and we're going to put it into 12/31/20, so that as of January 1st, 2021, the year we will be starting to put information into, it will already be rolled over and ready to go. So we're going to say OK there, and once again, all the rest of the data looks good. We're going to keep that as is and say save and close. There that balance is. Note what we're not doing here is we're not putting balances into the income statement accounts. Those are timing accounts. Those only happen over time. We typically want to start our business as of a one-time period going forward. We don't typically want to go back and try to enter the income data for prior years. If we have to do that, then we're going to do that a different way. We're probably going to go to the bank statements and enter everything in as we go. But if we're just starting from this point in time, moving forward, which is the best option, if that is an option available, you can do that. Now, if you need the QuickBooks to enter prior data in order to track your prior data, in order to see if that prior data is correct, then I would take your bank reconciliations and enter that going forward. But we'll talk about that at a later time. For now, we're just entering those beginning balances. This is where we are at. You can go through this chart of accounts and see if there are other areas where you think you have a beginning balance, and see if you need to add that. Those are going to be balance sheet items. Those are going to be the asset items and the liability items, typically the ones we will be starting with. Once we have that, then we'll be putting all the rest of the data, the activity data, into the system as of the current period we will be starting with, in our case, that being 2021, January 2021. Now that we have this information, we're going to go ahead and print this out in a report format. We want to take a look at a trial balance this time. So we're going to take a look at a trial balance. That will give us our list of accounts and balances for them. So in order to print a trial balance, we go to the reports up top, and we're going to go down to accounting and taxes, and then we're going to go to a trial balance. I'm going to change the date ranges. I'm going to go from 01/01/20, and we're going to go to 12/31/20. So January 1st, 2020 to 12/31/2020. And then we'll see our balances here. So we got the checking account, 25,000, accounts receivable, inventory, furniture, accounts payable, Visa, loan, and then we've got these three, which are kind of funny looking down here, but that's kind of the price we pay for the fact that we haven't had to do any journal entries. We entered all this data without a debit or a credit, without having two accounts for any entry, with just entering beginning balances. The drawback is that as we did that, QuickBooks basically put this information into kind of random accounts, into the other side, because there's two sides to each account. So when we entered 25,000 in the checking account, QuickBooks had to do something with that other side of it, and let's see what it did with it. If we double click on the checking, we see the activity here, and I'm going to say 25,000. Won't let me double click on that. So I believe where it put it was opening balance equity. So let's check that. We'll go down here to opening balance equity and see this activity, and let's make this date range a little bit older. See if it's a date thing. So we've got this information in here. So this is all the information that basically we had the inventory parts that they put to the other side went to the opening balance equity when we entered that inventory. We didn't do that this time. We did that in a prior video. The Visa went here though. When we put the Visa card in there, they put it into this opening balance equity, the other side of it, that is. The loan payable, the other side, the 22, went into this account. And the furniture and fixture went into this account. So I'm going to close this back out. The other account, I'm going to say no, that it will put things to is going to be this uncategorized account, income and uncategorized expenses. So let's put that into context. Let's take a look at an income statement just to see what it's doing here. And we're going to say reports. We're going to go down to company and financial, and we're going to look at a profit and loss. And I'm going to change the date range to 01/01/2020 to 12/31/20. And note, here's where it put that other uncategorized 20,500. It put it into uncategorized income. If I double click on that, if we drill down or auto zoom on that, then we see this information here, the 8, the 7, 5, and the 5,000. That's where the 20,500 is from. Those being the receivables, in this case it looks like those are the receivables from the beginning balances when we put our customers in a prior video. I'm going to close that up, and then we've got the uncategorized expenses here at the 15. So point being that this statement makes no sense, but this is the statement, this is the price we pay in order to enter those beginning balances, and it's not worrisome to us. Reason being is because we're not going to be dealing with anything in 2020. We just want to make this balance go forward in 2020 so that the balance sheet amounts will be correct as of January 2021, the year we will be working with. I'm going to close this back out, and that means that all we need is this equity account basically to be right as of January of the next year. Now we're probably going to change this equity and just kind of put it into one account, one equity account, rather than having multiple accounts. These income statement accounts will roll forward for example, if we went to 01, 01, 21, 01, 01, 21, then note that we don't have those uncategorized accounts because those are income accounts and they rolled forward into the owner's equity as we would expect. We do still have this opening balance, which is not, nice, not what we really want. So we'll probably just close that out to the equity and we will then be okay. So point being, these amounts are all correct. That's what we want to see. That's what we want on the balance sheet. We're not worried about the fact that QuickBooks kind of dumped the other side of the journal entries into these uncategorized accounts because we're not worried about the past, the income statement in the past. We're starting at this point in the future. We want our balance sheet correct and then move into the future and create our income statement as of this point forward. Also note that I have made an error on the date of the checking account here. It's not a problem, so I'm not going to fix it, but I want to show you the problem with the date problem that was done here and what the effect is on it. So if I close this back out, we note that we had this checking account, 25,000. That's what we want. I'm going to double click on that. And then I'm going to change the date. I don't see the activity here, so I'm going to change the date to go way back in time on the beginning balance to like 1995 or something, just to see if I put the date sometime way in the past. And note that I put it in 2000 instead of 2020. Again, that if I had the alert on that would have told me that it was in the past, they would have told me that with an alert as I did that. But note that because I turned those off because we're working in a date range outside of the normal date range, it's very easy to put the wrong date in there. It's not going to affect us here because we're still going to have that 25,000 on the books as we start moving forward. But if we want to change that, or if we want to look at where that data input is, we can double click on that. And we see that it formatted then a deposit slip. So when we put that beginning balance in there, it formatted a deposit slip and it put the other side into the opening balance equity. So I'm going to go ahead and change this from the year 2000 to 2020. And there we have that, and then save and close that. And then we'll close this. And note then that if we go back into this opening balance equity, and we have the date range from, well, let's close this. I'm going to change the whole date range again. We'll change the date range back to 01/01/20 to 12/31/20. And then I'm going to double click on the opening balance equity. And then there's that 25. So this will then give us the list. So it wasn't showing up in the past. The point being is because it was in a prior date. But this will give you an idea of the other side of what's happening. It's going to be somewhere in the equity section. And we'll have to deal with that at a little bit later. We'll fix that. So I'm going to close this out. And I'm going to print this for now. I'm going to print this and I'm going to export it, I should say. Export it to Excel, to the worksheet we have prior set up for this problem. This would be how you can export it. You can print it. You can save it as a PDF. We're going to practice exporting it to a workbook. A workbook, in this case, we have already set up. If you have not set one up, then you can go ahead and export it to a new workbook. So in order to do that, we're going to go to the Excel tab. We're going to say Create New Worksheet. But it's going to go into the same workbook, and we're going to say click on that. And then we're going to get our options, and we're going to put it into an existing workbook because we already have one we're working on in this series. It's already going to the right spot, but of course you would then browse for that Excel sheet you're looking for. Mine is right here, section 6, that's what we want. I'm going to double click on that, and then I'm going to go ahead and export, and then Excel will export. It will open up that Excel sheet. It will then export the information to a new tab within that Excel sheet, just like that. Note that we have worked on the item list, the customer balance, the vendors. It put the new sheet kind of in the middle. So I'm going to pull it to the last part here. And I'm just going to double click on it, change the name, and call it a trial balance, and let's beginning balance. So it's the trial balance with the beginning balances. So we're going to put that there. And then I'm going to make it a little bit larger. I'm going to hold down Control and scroll up. Or you can go over here to the plus item and make it a bit larger like so. And there is that. This is the information we have taken a look at and put together so far. we will continue with this as in the future presentations.